Morning, everybody. Welcome back to Schwab YouTube Coaching Channel. Our next topic this morning, get Trader Talk in today's market. And I'm your host, Kevin Horner. Thanks for remembering what show I'm hosting today, Kev. I'm pleased to be here with all of you today. It's Wednesday, so I'm joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. How you doing, man?
Doing great. It's getting pretty summery-ish out here and nice and warm and in Salt Lake area, but I'm glad to be on. It's a beautiful day, and I'd rather spend it here right now with you guys than anywhere.
That's right. I feel very similarly, Brent. Thank you. Outside of the warmth factor, I've noted that as I've gotten older, most particularly the last couple of years, I just don't manage the heat nearly as well. So when we get over that 80-degree level, things get a little uncomfortable for me and my thin skin. So not to mention I'm thin-skinned and fair-skinned. The sun and I don't get along all that great. So I'm fine if it would just kind of maintain a solid 73. That would be just tremendous for me. But
yes.
Anyway, we've got some sunshine in the market again this morning, everybody. Green open today following a cooler CPI number. We're going to look at that with all of you, hit up a number of charts as we always do. We are joined this morning by Cameron May in the chat. You can chat with him. He'll answer questions and comments that Brent and I are unable to get to. But of course, we're going to keep an eye on what's happening there in the chat. We want to hear from you. Feel free to post for the duration of the show. Please follow the three of us on X, Cameron May CS, Kevin Horner CS, and Brent Moore CS. We try to post for you there throughout the week, either some notable charts or maybe some pieces of inspiration for you. But whatever the case, it's a great way to engage with us outside of the shows we host. So we'd love to have your follow there. Some reminders for you, and before we'll get into the charts this morning, remember that our discussion is always informational and educational exclusively. We do not make recommendations nor endorsements for a specific approach to trading the market. We talk technical analysis. We cover and review concepts, strategies that traders may choose to employ. But it's important to remember technical analysis is merely a piece of the overall puzzle. We encourage you to utilize multiple pieces of that puzzle to base those decisions, of course. So just keep that in mind when you're thinking about technicals. Do not base your decisions exclusively off of one single piece of information. As usual, our agenda remains the same. We'll start top down. We'll look at the S&P 500. We'll look at the NASDAQ 100, the Russell 2000, certainly the semiconductor index, and then we'll move on to review some sector action, what's really moving around here. A lot of positivity, a lot of green sectors here on a year-to-date basis, and certainly over the shorter term. And then we have stocks in the news as well. So let's get right to it, everyone. We're going to lead, as we do, with the S&P 500. Brent, we've had a continuation of the little breakout we got last week. And man, it's getting harder and harder to deny what we see on this chart, sir.
It is. Yeah, big V. Do we end up where the 6150 level, 6147 level is, I guess? That seems to be like the trajectory that we're on right now, is the substantial resistance that we have, because everything else we've blown through. You can see the kind of short little line that you have on the right there, the horizontal line, went right through that. Second time it was a charm on that one. That RSI is showing how strong we've been. And you know, the news is not, I don't know if the news is spectacularly good, Kevin, but it's not terrible either. And it seems like, given that situation, the market's momentum is just being maintained going up.
You know what it reminds me of, though, Brent, is that we can try and parse the news any way we want. But what matters is how the market is reacting to said news, right?
Yep.
And while we can, and this is something I mentioned on Monday with Jeffrey Abelos, the idea of what a bull market feels like, and the reminder the bull market climbs a wall of worry. What does that mean? The reminder there is very simply, there are always going to be narratives that traders and investors alike will utilize to tell you that the market can't go any higher. This can't happen because of X. This can't happen because of Y. We've got policy issues. We've got geopolitical concerns. There are a multitude of issues, and yet here we are. So again, it becomes a decision to simply trade what you see and not what you necessarily think, Brent.
Yes.
And that is one of the hardest balancing acts for a trader, isn't it?
It is. I mean, you know, I pointed out earlier, that there could be resistance around 61.40. Look, for all I know, the market may continue to blow through that. You just don't know. So what you do is you take, you have a plan, and the plan is, hey, maybe if it starts to bounce off resistance, maybe that's an approach. If we break through, then that's the approach you're going to take there, perhaps, on that. But whatever you think, maybe you just think the U.S. economy is headed for the dumps here. The chart is telling you otherwise in that sense. Even if you think that the economy is not going to do well, if you think inflation is going to go, right now the chart isn't reflecting that, and it's just, I mean, maybe at some point it will turn around, but right now what we talk about, reason we do technical analysis is you have something kind of objective to go off of, and until it changes, until the chart changes, and it hasn't changed at this point.
And we should also mention, Brent, that what we're talking about here is an approach from a trader standpoint that follows the trend. Not every trader trades with the trend, it should be noted, but trend trading at least gives you a better understanding of where you can manage your risk along the way. And that's really what we talk about here in this show, is incorporating the current trend to aid us in some decision making along the way. So Brent, knowing that, taking a look at the S&P 500 before moving on to the NDX, for example, where is it where we would start to shift our viewpoint in terms of the short-term trend, and can give us reasons perhaps to get a little more defensive in nature? Because if you're trading the trend right now, there's not a lot to work with that tells you to be defensive right here.
Yeah, I'd say lower highs would be a key sign on this, because right now we've had higher highs, higher lows from the bottom when we were in April. And until that changes, it doesn't matter what the RSI does. I mean, the RSI has been going up, but even if we get a lower high on the RSI, that's kind of a secondary type indicator. Let me show you one other thing. If you switch to the ES for a sec, Kevin.
Sure.
And go to like a 6-month graph and put on the volume profile on this.
All right, I can do that.
And the reason why I had Kevin switch to the ES is because there's a volume associated with it, whereas the SPX there isn't.
Oh, there we go.
There on this.
Huh.
But what you can see is, and it's even more if you switch to like a 6-month graph, it's even more pronounced what you're going to see here on this. And that is, look at where the volume has been on this over the past 6 months. We're in a zone of where the trading has been. You could look at this and say, it seems unlikely there's any way the stock is going to go up above 61.56 or whatever there from this graph. You know what? That would not deter a lot of traders here, because it just shows where the market hasn't been. But just whatever indicator you use, RSI, volume profile, MACD, ultimately they are going to be secondary to price action. And as long as that trend is going up, I know this is a long-winded answer, as long as that trend is going up, then to me, that's the biggest signal right now, is the trend. Higher highs, higher lows.
You really can't dispute that. And for the record, a long-winded answer is perfectly appropriate, Brent. These people are used to listening to me. So they get long-winded answers all the time. So yeah, I agree. We're looking for a departure from what's been working. Here's my final takeaway, everybody. A close, for example, whether it's the ES, the S&P 500, a close below the 20-day moving average would be the first time since April 23rd. That is not a small period of time. We're talking about 6+ weeks, maintaining that moving average, and a shift below that on a closing basis would be notable. And so, in the midst of an uptrend, that could we have a lower high here versus this one? Absolutely. But in truth, we probably don't have a true risk until we see a lower lower low first, right? Which means we probably need to break down to a point that would take out our gap ledge and the 200-day moving average. And that would be dramatic. That would be big. But Brent, we could easily devolve down through the 20-day into just a range, maintaining the 200-day. Now, we don't know which of these scenarios happens or if either of these are the scenario that plays out. But again, it's a process of simply thinking about what can go, what can happen, how will I act if this goes. And those steps, it's that playbook, right, that makes it easier on us in the moment. That's what we want you to take away. You all know it. You hear me speak about it all the time. Just knowing how you want to act when things change. That can be a big, big part of making your decision process substantially easier. So hopefully you're incorporating that concept, everybody. Okay, now let's move on to the NDX. And by the way, when I say incorporating that concept, that's not an encouragement to do anything specific. It is an encouragement to know where you want to act. So obviously, I can't tell you what's going to happen next, but I can tell you, based on my approach, how I'm going to act. Unfortunately, I can't share that with you, but of course, I have those ideas. That's what I want you to do. Okay, ultimately, Brent, man, this NDX is right back there. My goodness, we are fewer than 300 points in the NDX from the all-time highs.
Yeah, and maybe this is the forerunner to the SPX here in the sense. The chart looks pretty similar, except we're almost to the high here on this. So we'll see if we bounce down. But even if we get a small bounce, that doesn't change the trend on it. Wouldn't surprise me in the least if we bounce off of that. What are we at? 22222 level there, kind of the high. Mm-hmm. But again, it depends what it does after that, and the trend, there's just no, until the trend change, until we get lower highs, lower lows, it seems pretty bullish, and a pullback, under this premise is likely to be short-lived.
I think that's the reminder. Look, I mean, at some point, we're going to get a shift. At some point, something will change. Right now, there's not evidence of a change.
Yeah,
and that's the hardest part, right? Because you can deny the change, the trend all you want, Brent, but you put yourself in bad positions either by positioning against the upside of the market, which is obviously there, or not having yourself fully invested because you don't believe in it, right? Either one of those are risks.
Yes, and I'd say even if we break the 20-day, I mean, that's maybe a yellow flag, I guess, so to speak. Mm-hmm. But a lot of times when a stock breaks the 20-day, you can see that back in March when we broke it to the upside, when we were still going down. It just kind of temporarily broke it and then just continued on its merry way down. I could see the same thing happen. Now, having said that, and I know this may sound unabashedly bullish to this point, but things can change immediately. Right now, when we're getting news, unless it's like really bad, the market is just kind of incorporating it. Mm-hmm. At some point, what happens is you get good news and the market doesn't really react much. And that can be a sign that things are maybe starting to turn around. When it just kind of takes, the good news, that's been priced in, the market isn't going to move up very much on good news. That's not the situation we're right now, but that's how you can change it. Look for that change. Similarly, when we were in the downward trend and we were getting bad news and the market was like, it kind of shrugs it off, that was a sign of a change on the downside of things. So those are some things to look at.
That was an excellent reminder. I really appreciate that because you're absolutely right. Change can come in the form of price movement, but change relative to story and narrative can be even better, right? When you start acting positively in terms of price action on negative, or what is typically considered to be negative news, that can be really insightful. So, I would say, unfortunately, only because, a grinding higher market might be a little boring. Hopefully we're managing our trades properly and going with it. But I'll remind us, if we get into that new high level, we're going to hear that voice of Lee Bull in our ears there. New highs are not bearish. So never, don't ever let that, seep out of your thought process. Hopefully we get new highs out of the NASDAQ. We'd obviously like to see that continue. Let's see how the small caps are acting, Brent. We've had some relative strength out of the small caps the last week plus. We broke to the upside here in the last 3 sessions. I'm going to remove this measured move calculation line I've got, but big move has been through the ledge at 2110, and now we have, basically just drifted higher into the 200-day moving average.
Yeah, small caps have more to go though. They got beaten up worse than everything else. So yeah, that broader chart you just brought up, you can see. I mean, the NASDAQ we're right at all-time highs almost. The S&P 500 not that far away. This is still quite a ways away. So sometimes when something gets overly extended on the downside, when it goes back up, it tends to go back up a little more. And that's what we're seeing on the Russell right now.
Yeah, seems like we got through that 2110 and the drift just moved. The one positive that stands out here, a couple of positives, I should say, the broken downtrend line, the continuation working against support along the 20-day moving average. Also, Brent, though, we've made a new high in the RSI. So that stands out to a lot of traders as well, because we are now at the highest trade price we've seen since we started breaking down in late February. But our RSI is clearly giving us some indication that we've had some relative outperformance and some strength in here. So eyeballing that 2175 level here is what we're probably looking at.
Agreed. That's kind of a potential resistance level. Not only is that 200-day moving average there, but that's pretty close to where our lows were right at the beginning of the year. And the bounce that we had, off a potential resistance level, I don't know, a few weeks ago there. So that's kind of a key level. But same thing we were saying before. That's given the market that we're in. That may not be as big as an impediment. Even if we get a temporary pullback, the general trend is going up.
And one other takeaway here, Brent, I changed my lines a little bit, but just a reminder of some common processes that'll play out. You break through resistance. Resistance in green was resistance until we broke through it. I changed it to green to validate it as support. What's interesting now is that a rejection at the 200-day could just mean a retreat to the breakout level in the vicinity here. And what's notable is the rising 20-day moving average. If and when we get back to that 2110 for a throwback to test, that becomes a level of confluence where the moving average is up at that 2110 level, and that's the horizontal breakout level. The more pieces of data at the same price level, the more instructive that price level can become. So 2110 looks like short-term support for a multitude of reasons, and trends for short-term horizontal support as well as trend support, Brent. So a couple of notable pieces there.
Yeah, one last thing, just a note, when you're looking at moving averages as support or resistance, they change. And so by the time this market, and who knows, I mean, this could drop down today for all I know, way down. But if it takes a few days in the pullback, at that point, that moving average will be at a different price than where it is right now. It could potentially be like right in line with the, I don't know the exact price level where you got the green line there on that, but it's creeping up a little bit each day. So those could really come into confluence here shortly.
Yeah, that 2110 level is what we're going to eyeball there. And, it's about 15 points away on the 20-day, but, a 20-day moving average is pretty speedy. We're only looking at the last 19 sessions plus today's intraday action. So each day we remain higher in price is another day dragging that 20-day moving average right along the way. So one thing we're going to check out here briefly, of course, is the yield situation. Yields are falling a little bit. So, we are noting here, Brent, we do have still an upward trajectory to the yield environment, but and also kind of maintaining the level over about 4.3, 4.35 here. But you know what? If we continue to receive confidence in the U.S. economy moving forward, there's apt to be more interested buyers of U.S. Treasuries, suppressing U.S. Treasury yields. So that could be something that would, again, continue to lift the small caps, continue to give them the opportunity for some outperformance. Other things you're considering here as it relates to the 10-year, Brent?
No, nothing really of note that you haven't said on that. Just one other thing I would mention is, the 10-year is kind of a key level that we look at a lot, but you can look at other levels there in terms, if you do like TYX colon
Sure.
CGI, you come up with that's the 30-year, and you can see we're kind of pushing that 5% level, which is, little higher there. If you want to see real short term, you could get the T-bill, the IRX CGI.
Okay.
That's going to be like a 13-week. You can
Real
just
short
compare interest rates that way
Mhm.
on that. And you can see kind of your own yield curve, so to speak, on that.
Yeah, you're right. So, again, just moving your decimal, you're looking at about a 4.2,
Yeah.
4.24, the 10-year around 4.35, 30-year around 4.9, close
Yeah.
to 5.
Yeah, and you don't need to bring it up. FYI, FVX colon CGI would be the 5-year. So.
Okay. All right. Let's see, Brent. Let's move it around today, sector-wise. We don't have huge moves to the upside. Not that that's a big surprise for us. Our leadership, I suppose, could be from technology. Nobody will be surprised by that. Let me hide my volume profile in here real quick, just to aid us in looking. But it has to be considered notable, Brent, that we see the tech group breaking out further here, broke the downtrend line, dragging that 20-day moving average nicely beneath us as an area of short-term support, coincident now with the breakout level, the horizontal breakout level, that is. So I'm sure there's a multitude of traders eyeballing that 45.90 area here on the particular indice.
Yep, and it's probably not a surprise if you consider the whole market, how strong it's been. The MO has been tech kind of leads, and that's what's happened. Tech and other, kind of higher beta type, cyclical type sectors like IT, or not IT, but like communication services. You got a similar situation there. In fact, what has been driving the markets have been more these kind of cyclical type things. But again, here's communications. How far are we from the all-time high on that? Not very far away as well on that one either. And so, yeah.
Wow. This has just been a stalwart off the bottom. My goodness. You could have been forgiven for just stepping away from communications here. This was ugly in early April, but what a tremendous rally we have seen, everybody. The group itself up 31% over about 9 weeks. That's a pretty impressive rally there. I want to say thanks to Cameron for some notes there in the chat. Love the note he makes here. Fastest ever recovery from a 20% SPX sell-off is currently 126 days from that COVID bear market. Just a wonderful reminder of the speed of this bounce. And, again, sentiment can play a big part in these moves, Brent. The denial. Oh, my goodness, the sky is falling. Remember, early April, that was the narrative. That was the story. The sky is falling. We don't know anything about where the market should be. What can we rely on? The tariff story, etc. And man, it has just been a strong rally back. Okay.
Let me just make two quick comments here. One, I want to point out the RSI because Joe made a comment in the chat. How do I add that RSI? Well, let's talk about how to add that RSI because that's just a standard RSI you're using, I think, standard settings. So you go to your studies. You can go to that little flask at the top of your screen. There, click on that. It's going to bring up this window that Kevin has there, and you can scroll down alphabetically if you want on the left, or you can cheat like Kevin did and just type in RSI in the upper left.
Not fired. Come on.
And then you just double click on it, or you could add study or whatever it says at the bottom. Add selected at the bottom, and then you don't even have to change it because I think you got that's the standard say, but I think you thicken the line a little bit there, Kevin, from the
Better believe
default
it.
to 3.
Yep.
And there you go on that.
Yeah, I need to make sure it's visible, right? You're hosting shows,
Yeah.
people need to be able to see the line. Thicken the
Exactly.
line a little bit.
Exactly. And, you know, just a comment on that RSI. Look at that RSI. We're up at 74, 75 right there. Yeah. So that's high. And some people may go, ooh, that's the overbought zone. Therefore, this is coming down. I don't necessarily interpret it that way. When the market is trending, that RSI can go up there, and it's more of an indication of what it has done. And we have been trending lately. When we've been not trending and we're more in a sideways action, is probably more of a cautionary thing when we do get up super high.
Yeah.
On that, but you know, so there's a RSI there, Gary.
Yeah, let's just give you a few additional tidbits for traders who use the RSI for signals. The signal moving into overbought territory in the midst of a strong rally like we're seeing here, that 70 level is considered overbought, but that is not a sell signal. If you're using the RSI, typically the trader would consider a sell signal when the RSI once above 70 then comes back below 70. And when I say sell signal, that doesn't mean sell the position entirely, of course. That might mean reduce position size, have a plan for how you want to handle the remaining shares. But ultimately, trading back below the 70 line is the key that perhaps the trend has come to a point in pause. And then further, if we do in fact bring the RSI lower, we want to see the RSI maintaining a level above the midline, the 50 line here, because in strong trends, strong bullish trends, that is, retreats from the above 70 down to the 50 line commonly reflect oversold conditions at the 50 line in the midst of a strong bullish trend. If you flip that over and are thinking about it in the midst of a strong bearish trend, well, then rallies into the 50 line become potential resistance for price action thereafter. So think of it, you have to make adjustments along the way depending upon whether we're looking at a strong trend, bullish or bearish, or are we looking at more of a consolidation window or a sideways price action period?
Yeah.
That's a very, very common way to think about it, right, Brian?
And let me just add this one comment here. What we just said, the RSI is just one signal. You need some nuance with it, as kind of Kevin went through there. The same is true with pretty much any other signal you use in the market. I wish there were just like this magic bullet that, you know, oh, I knew exactly, it's going to tell me exactly what the market is going to do. Alas, I haven't found that yet, Kevin. So look at different.
I was waiting with bated breath, Brent.
I know.
I thought you had it. I thought you were.
I know you were waiting. You've been waiting for me to reveal it to you. But so any signal is, you know, you may. Let's go through a scenario. You're scrolling on the internet. You're on YouTube, and you hit some investor some trader who's flying on his, you know, personal jet or whatever, telling you how he's going to make you $1 bazillion or whatever through this one system. It just doesn't happen that way, folks. Yeah. It's I wish it were that easy. It's just not that easy. And so whether we're talking RSI or any other indicator, they can be helpful in your overall system, but there's no one single signal there for you.
It's true. Yeah, it's unfortunate. It would be great if there were one out there that we all could just rely on infallibly. Unfortunately, that does not exist, and that's why we have these discussions. That's why we talk trade management and planning and all that silly stuff that is so important. I say silly because I say it constantly, and if you're a frequent attendee, you're probably, you know, you're wondering about when I'm going to be offering you the shirts that say the same things, the same axioms I bring to the table every single day, it would seem. But it's these things that help us as traders, these little rules of thumb that help us make our decisions efficiently, we hope. So, Brent, I wanted to look in on energy. I noted a recent move in oil that's been kind of intriguing to me. Energy has been improving, and we have recently recaptured both the 20 and the 50-day moving averages, which is notable. But I wanted to look at crude real briefly as well, because this has finally started to get off the mat here, and it is bringing the energy space with it.
Yes, it has. So meaningful. It seems like a kind of a meaningful change in oil. Now we have that kind of longer intermediate term trend down. Are we breaking above that? Shorter term, we've seen some strength off its lows, and so I don't know. I don't know. I mean, from on the news standpoint, there's a couple things. Remember, oil. There's always a demand side and a supply side. Maybe some encouragement on in terms of maybe progress in the China-U.S. talks. Maybe that helps it in terms of the demand side, in terms of the supply side. Maybe some concerns that a lot of people were pretty optimistic about the Iran nuclear deal about a week ago. That's maybe some positivity around that may be diminishing. That could be affecting the supply side. And of course, there's other factors as well. Those are just a couple that come to mind. But regardless, we use the charts here. We're looking at the charts, and we're up about, over 10% here, almost probably 20% from its lows just about a month or two ago.
Well, we're going to do the Kevin cheat method, of course. So I'm going to draw the line to, I think I'm going to draw the line, that is, from the 55 level up to the level we reside at, 66, 20% pop, just like that, right to that band at the 67 area. Now, we could certainly drift into the 200-day moving average up there, Brent. I wouldn't be shocked by that. But it would be, significant to get back up above the 200-day for any period of time. I think that's something to pay attention to as it relates to crude here. What about, I see zinc mentioning copper, and always a good idea to peek in on it as well. So we'll take a quick look at copper futures, which are, kind of just not moving a whole lot, except for the move off the bottom from April when we were so concerned, Brent, about the tariff situation and how that was going to hinder our economy moving forward. And copper is commonly thought of as a kind of a heads up to the health of the economy and what we're doing in terms of usage. Because, if we are growing, copper is absolutely a need. So seeing copper off of those lows is certainly favorable. Is there anything else you're taking away from this particular look at things?
Right now we've held those moving averages, and so we're kind of stair-stepping up, if you will, and we'll see if we can establish this as kind of a new level, but shorter term trend, and you can see that reflecting the RSI could trending up there. A lot of the copper will be demand driven, and if as long as the global economy is looking a little bit more positive, then you tend to see copper do fairly well.
Yeah, and I was noting the RSI, you called it, got into the 60 level before rolling over here, but as we're trying to figure this all out. But, ultimately holding the trend line, holding the 20 and 50-day moving averages likely means the RSI doesn't make a new low. And I'm sure that would be something that some traders are going to keep an eye on, as they don't want to see, regardless of what price does, they don't want to see the RSI trending lower. So you would not like to see the RSI back under 45 anytime soon, Brent, I would think.
Yep.
All right. That was a quick look at copper. And then lastly, let's just peek in on Bitcoin. Bit of a continuation here. We have a bit of a bull flag that we have broken from. It could be considered on Monday to be that early aggressive entry based on just getting outside of the flag, Brent. But we are right now in the midst of what could be back-to-back indecision candles, back-to-back dojis there.
Yes, and this is kind of a bigger flag you drew, but there's like mini flags within the flag, so to speak, that you can see. And a lot of times flags kind of have that fractal nature. Along the way, it goes up and kind of pauses, goes up, pauses, sideways, breaks out. But that's exactly the breakout that a lot of traders like to see in terms of their flag patterns. Nice strong break above that upper flag line, in this case, coincided with the break above your 20-day moving average as well. And so that's a pretty bullish signal for most technical traders.
Yeah, that candle in particular. I mean, it's one
Yeah,
thing if the candle on this day looked like this or like this,
yeah.
but as a strong range day with a finish at the peak, that does carry a little bit of weight getting outside of this 2 week bull flag situation. So that seemed a little notable as well. What I would say, Brent, let's get to some stocks in the news this morning. We did have some upgrades and to check in on downgrades as well. The two that I wanted to point out, one of them is First Solar, FSLR, has been in the midst of a rough go, but there's been some improvement in the chart. Brent, I'm going to just speak quickly to the headline here. Jefferies analysts upgrading First Solar to buy from hold. New price target at 192, up from 157. The firm stating that it is, quote, time to get constructive again, end quote, on the shares. So they've looking at this as what I imagine, Brent, a recent break of the downtrend line impacting this decision to a certain extent. Clearly, they're going to rely on fundamentals, but I can't get away from the fact that the downtrend is broken.
The downtrend has been broken, and we tested it. We came back down to it and tested, and that's off. That's kind of a signal a lot of people like to see on that. So that's a meaningful change. I mean, it can be tough sometimes when you're looking at something that's been in a longer term downtrend as to like when is this changing, and higher highs, we have the higher low bouncing off that. Mm-hmm. And yeah, that RSI, which you have marked out there on that, is a key nice little trend that we have on that.
Yeah, I think so too. The bounce off the trend line. I mean, let's not get too cute because we know that with a manual trend line, I can manipulate that any way that I want to make sure that I catch that bounce. So of course I'm going to put it right on it. But so that looks interesting that day. But aggressive traders might have started making note of the fact that we were making new lows, but the RSI was not. So we were getting improvement on an intraday price action as we made that new short-term low, but we made a relatively higher low, if you will, with regard to the RSI. But then the broken down trend right here gave traders a reason for, hey, heads up, something big could be going on. You didn't get 3 days above the 200-day. You only got a couple, but you did get the throwback. And then if this was the low day in that throwback that we got, then perhaps maybe not the doji day, because that's an indecision right at potential resistance, but maybe the next day would have been a bit confirmatory in nature for some traders who wanted to buy on a close above the high of the low day, Brent.
Yeah, the one other thing I would say is if you look at the highs that we hit in March, that we bounced off multiple times, we held those lines. So even if the diagonal line that you drew wasn't, that certainly can be changed, I guess. Yep. That's kind of the horizontal, that was an old resistance that's broken, now presumably new support, which it's at this point that has held. And so that is another sign of kind of a meaningful change. I mean, the trend could have kept down. It could have just gone in a sideways consolidation pattern, which it did for a little while, but we broke out of that level. And that's what we're looking for is a breakout of these consolidation levels.
Yeah, absolutely. That's what but what trend traders are looking for when you're getting outside of those little consolidations. And right now, I got to point out this does look a bit like an island maneuver. So we got to pay attention to the fact that we have stopped today's buying at those lows, consistent with this little detail here. So just a heads up on that. This ledge and the 200-day could still be resistance. So you are going to want to see some closes over the 200-day. Maybe that's a single day to get you started. Maybe it's a couple of days. Whatever your confirmatory signal is, everybody, the 200-day could be the indication of note, because when you look at it, Brent, we've been below the 200-day with pretty good conviction since, at least since back in November. So each time we've been above it for 2 days, 3 days, 4 days, etc., we've gotten beaten back pretty well. So we're looking for a shift to that mentality from the last 7 months and over the 200-day and maintaining it, getting the 20-day through the 200-day to the upside as well is kind of the thing that I'm sure many traders would be looking for. All right, another upgrade opportunity for Urban Outfitters. Brent, this one looks a little bit different, right? You got a bull trend here that's just merely in the midst of a pause.
Yes, look at the. Let's take a look at the longer term chart as well on this one here, Kevin. But this is, I mean, this looks like a tech company that's flying high right now, it's a company that's been around many years, but it's found new life, and that's tough. I mean, with clothing companies and whatnot, how do you remain relevant and appeal to the newer generation? Well, whatever they're doing, I don't know what they're doing, but whatever they're doing is working well right now, it seems like, because this has gone up. I mean, we were down, it's doubled in price over the past, what are we on, 3-year chart, but even.
Let me put you there. I'm sorry. Here you go. Oh my goodness. Yeah. We've done an immense move.
But look at this parabolic move after the previous move was already going strong. It just like hit the what is it, the nitrous on the race car, whatever. There, it just like you were already going 70 miles an hour, and you just hit the accelerator and shot way up. And so, I mean, at some point, people will find it valuable. But right now, the momentum is all really strong.
It really is. We've drawn in a bit of a flagpole there on the daily chart. Depending on how you're timing it, the pole doesn't have to be drawn from the bottom there, but that's a pretty incredible move just from the April bottom up 81%. We could do something, Brent, real quickly, utilizing my preferred methodology. I say preferred, everybody knows I love to play with Fibonacci's. Ultimately, I'm just trying to see how much give back we've had on this rally, thinking it could be 23 or 38%. Looks like we've given back just a little less than the 38% of the gap move here, from the gap, I should say, which has been a gap and go move, as it turns out. And then now we're just looking to see, can we trade above that top white line, Brent, in the form of a bull flag breakout, like we might have seen with, like we saw there on the Bitcoin chart, for example.
Yeah, if you got a candle like
white line.
Yeah, it'd be nice to get a nice big green candle busting it out there. Don't have that yet. We'll see on that though. And this is a 3-year chart, but it is daily data that you're using there on that, everybody.
Yeah, that's exactly right.
Sometimes when you switch to this is just a user tip, I guess, for everybody. When you switch to the longer term charts, a lot of times it will switch the time frame to like weekly chart or something like that. And so just be aware of the interval, how much each candle represents on whatever chart you're using.
And I should make note of the actual headline on this. I did state that they were upgraded. They were upgraded by Baird to outperform from neutral, with a new price target at $90, up from the former $75, following Urban's Investor Day. The event, quote, reinforced a double growth strategy, end quote, in Urban's core portfolio, according to Baird. So they believe in an increasingly important but underappreciated growth and profit lever for their rental space, which I found to be a little different than expectations, but nonetheless, they give you that target at $90, up from $75. And we'll just point out once more, price targets, whether measured move or analyst price targets, these are never guarantees to be achieved. All right, Brent, I'm afraid we are at time, unfortunately. A quick review of what we see in the market. We've got the S&P at intraday highs. We've got the NASDAQ at a little under intraday highs, and the Russell once more leading the charge. I just realized, Brent, we didn't even look at the semis. I even said we were going to look at the semis. There's a look at the semis. I don't think we're going to have an opportunity to really talk about it. But, when you look at what's going on with the semis and the NASDAQ and NASDAQ 100 and then the technology sector collectively, we see a lot of similarities. And the recent breakthrough here through resistance was obvious. Time to get moving there, wasn't it?
Yeah, not that different from the NDX chart in a sense. I guess we're not near all-time highs on that, but the most recent move with resistance there, and I think the narrative we did on that probably applies pretty well to the SOX as well.
I agree. And let's just keep a close eye on 53.75 because we have been beaten back at 53.75 on the Sox many times. So, as always, big thanks to our man Cameron May there in the chat. Appreciate all of you being here. Of course, we love having you join us and chat with us during the session. Thanks for being here and following us on X. Kevin Horner, CS, Brent Moores, CS, Cameron May, CS. Hit that thumbs up button down below for us as well. That'll help us out and when we get this into the archive for you a little later today. But we appreciate you joining and participating. Hope you all have a fantastic rest of your Wednesday. We look forward to seeing you all again real soon.